share my screen as well. Okay. All right, guys. A very good afternoon, good evening to some, and welcome to today's live webinar on geometric trading. Today is the 2nd of May 2016. Welcome and thank you for coming. And we shall begin. We are looking at loads of strength and weaknesses for some pairs, but a lot of focus, I would say, this whole week from say today the 5th right up to the to Friday onwards. The focus would be on some fundamentals, lots of fundamental focus on two pairs, especially not two pairs, two currencies, two countries, the US as well as the UK. Okay, we do have lots of strength versus weaknesses in the pairs. Here I'm showing you at the moment the currency center on Yahoo Finance, and here itself we can make a bit of a conclusion on what's moving the markets at the moment. We've got strength versus weakening, or strengthening versus weakening pairs, or strong versus weak pairs at the moment. Okay, as of market open today till date, you could see that we've got all in the greens at the moment, with lots of movements for the Australian dollar as well as the euro, and everything is on a positive side. Of course, we have got here, as you can see, we have got the euro versus the GBP is on the negative side, but most of the other euro ones are actually on a positive note. Now that gives you a bit of a comparison, telling you that there are more strength for the GBP here. Okay, because even though euro is strong or strengthening versus the other pairs we're looking at, it's still not matching to the strength of the pound. So what does that mean? That means that the pound has got still room for it to move a little bit more, and it's actually awaiting prices here to appreciate further. I'll go through the GBP US dollar first on the daily chart. Okay, and we're looking at probably clear out some of the lines that you could see. Give me a second, guys. Let me just perhaps just leave that. All right. Now we're looking at the price here at 1.4662. A lot of the some experts with some banks are looking at more appreciation of the pound versus the dollar, and it's looking at the 1.47 area, but once it has actually reached the 1.4720 to 1.4730, it might then appreciate further past the 1.4730 or 50, and right up to the 1.48 area. So it is actually awaiting more strength, but take a look at what's going on the daily chart. We have got the 200 EMA right here. Okay, so there are some room of for resistance in this area. So again, if we take the cursor and we're looking at here, we're looking at 1.4748. Okay, close to the this area, and that 1.4748 is really very close to the psychological number of 1.4750. So again, this is sort of the resistance zone there, and once it passes the 4750 area, then you will look at or 1.4760 area, then you're looking at more room to the upside to the 1.48. So a lot of traders are asking me, you know, how far more could it actually go? It could go as far as 1.48, but it all depends in stages of what's going on in shorter time frames at the moment. Let me just insert the time frame. Okay, and it's best for you to go onto the 1 hour chart and look at what's going on candle by candle as well. And give me a second, let me see if we've got more questions. What are the Carmelo, the moving averages are exponential moving averages that I'm using, the 50, the 100 and the 200. Okay, I'll just type it on EMA 50, 100 and 200, and they are all actually on close. Okay, just type that out for you. Now you're looking at let's just clear out, let's look into GBP USD, and then we could look into it on a fresh new chart, so we can reapply the lines again. Okay, so first of all, without doing anything, without inserting any indicators or so, we're just looking at what's going on in terms of price action using clock angles. Okay, the clock angles meaning that we're looking at, if you want a huge move like that, you're able to do so. You're looking at an angle at about 2 o'clock. Okay, so we have got, I wouldn't say weakening, we've got some perhaps uncertainty or anything that could actually drive prices valuation downwards, okay, or weaken on the weakening zone, on the weak zone down here because of the angle at the moment. But if we go on to the 4-hour chart, we still have got loads of room. I would say that the angle there is much more steeper on the medium term. Okay, so we do see some potential zones upwards that we need to be aware. As I've mentioned earlier on, 1.4660 has gone beyond the has not gone beyond but gone above the 1.4650 area. So that's that gives us some more indication that prices may go up a little bit more. So 1.46, 50 plus right up to 60. We'll look into the next site number at 1.4680. Okay, so you've got some little scalping room as well between now and 1.4680 area. Okay, but very small. Then once it has actually gone into that area, we are looking at more room. Now the thing is, I would like to share with you guys is that we do have a sort of W-like pattern, okay, but it's made up of the ABCD as usual here. Okay, now let me just draw that. That's my AB equals CD that I could actually show you here. I'll enlarge the chart in a minute. Give me a second. Okay, so I'm just looking at that possibility here, okay. From earlier on, what have happened with GBP USD is that the pattern has not actually failed in terms of the ABCD or the W-like pattern. The W-like pattern, which is very close to like a godly or a butterfly and all that, I don't actually have a specific type pattern name. I just call it a W, and then I use certain Fibonacci ratio to confirm that. Okay, so the W or any ABCD that we have actually traded with the GBP USD just gone bigger. It's just multiplied. So it's not failed as yet. So that actually shows more possibility of an upward move for the GBP US dollar. Okay, we do have more, I would say, positivity regarding regarding Britain's stay in the Eurozone. Okay, so the Brexit idea may have been slowly deteriorating, slowly weakening, you see. So that may be another reason for driving prices out. Now, we've got an A, B, C, D, let's say, and I would, what do you call that, zoom out a little bit, but then we want to look at the possibility here. That is where the D is basically. Now you can see that prices are really close to that area there. Okay, but if I look at pulling it here, let's say it's here, I've got a sort of a W-like pattern, but I like the W-like pattern to be high probability. So usually if it is high probability, then the X area here should be higher, not lower than this area here. Okay. And if I were to choose a higher point, then I'll take it somewhere here or even right up there. Okay, but where do I actually put that? Let's say I would like this to be a W-like pattern, a probable W-like formation here, which means that if prices does go like this, up, down, up, okay, it could be any way here. We will use Fibonacci to do that. Then what happens is usually in a W-like pattern, once it ends at D, so that is your C, this is your B, all right, that's your C, that's your X here, that's correct, and that's A, right? So you've got X, A, B, C, D, and usually once prices goes up at this area is called the P, R, Z zone, which stands for potential reversal zone. And usually once it goes up there, anywhere along here, it would make a reversal down. So that's a W-like pattern, which is also called a bearish-like pattern. But I would like to go through that with you again. Give me a second. Let me answer some questions. Okay. Yes, of course. We are on the hour, on the 4-hour chart. Daily, perhaps, yes. I just want to bring you to the daily chart for what I've drawn in the past. So that's why I want to show you from scratch, because we did have some questions on the W-like pattern and how to draw it from the scratch. Okay, so give me a second. We'll go back to the daily chart, of course, and then because the daily chart has got a pattern, a W-like pattern that's already there. You see, I did use the daily chart to actually draw that pattern as well. All right, thank you, Carmelo. No problem. Okay, so we have got that. Now, if at all this is treated like a W-like pattern here, okay, what you would need to do first is to determine where the C is. Okay, now the magic behind that is that you can pull the X to A. If it is a W-like pattern, you can pull the X and make that C drop or land closest to any high probability Fibonacci ratio. I'll tell you what I mean. Okay, give me a second. Let me label that for you first. Okay, so we have got a C here, let's say, right? Then we have got a B here. All right. Okay, and we'll work out a little bit on the levels with the pound as well, because I have had many questions regarding the pound due to loads of floating counts. A lot of people a lot of traders who are actually has been on a buy, on a sell, and they're looking at whether or not to exit through, or if they were thinking of re-entering, they would like to know whether or not they should re-enter now, or what are the patterns at play at the moment. Okay, so got B, C, I've got C there, I think A, right. Sorry guys, I'll just do it a little bit better now. I've got a B here, okay, so that's your A. So that's your typical ABCD pattern there anyway, right? A, B, C, D. And once you've attached a longish move from the very top to the bottom, you get that W-like pattern, okay? So D is sort of expected to project at that level there at D, okay? So if I've got my D here, how did I get that D initially anyway? That is by having AB, okay, equals CD. All right, so I'll just make it a little bit sharper. There you go. And that goes right there. All right, let's say we've got that. All right, now it is very important for us to look at where this X could potentially be. And how do I do that? Very easy. You take your X anywhere and you pull it right down here, and you look at where the A, B, C. Okay, the B, in this case it's the B here. Okay, in this case it's that one there. Okay, because it is a W-like pattern, so you're looking at where the B best lands. Okay, so if I adjust my X, okay, if I adjust on any high point, I could actually adjust it right here too, and that lands quite nicely at my 61.8. If that's the case, then what I'll do is I'll choose that point as my X instead of the one higher. Okay, let's delete that. So now if I've got a pattern like this where I've got my X here, why did I choose my X there? Because the B lands very nicely at my 61.8, and I have my favorites in terms of Fibonacci ratio, 61.8% or 78.6. Okay, so that would give me a nice idea that if prices were to go, it would actually go close or under this area here before it turns down. Okay, now give me a second, I've got questions. Osama, you've got questions about three moving averages. We measure the clock. Yes, you can, Osama. No, you've not got it wrong. You've actually got it right. You can use two ways of looking at a clock angle. You could use your three EMAs. You look at the shape of the three EMAs, and you could visually look at it, use your eyes and look at it and have a guess, a rough guess of the clock angle. Okay, you don't need to be perfect with the clock angle because you're looking at it a few times. You know, with practice you'll get much better, but you just want to have a bit of an idea. But later on, with the psychological numbers and with the way you draw the pattern and all that, it should all sum up and make it a nice what do you call that, a nice concoction for a pattern. Okay, all right, here we go. So let's say I've not labeled that just now, so I'll relabel that as my X. Okay, that's the X point there. Okay, so we've got prices, you know, it's sort of correcting at that area, and D, you know, for those who have already traded from C to D, then they would be exiting, you know, close to the D area, maybe at 4670. Why 4670? Because 10 pips before the 80 cycle number. So if you've already traded there on a buy, and where would you be seeing a buy possible entry is by attaching your A to the D. Now this area here is a very simple ABCD. Okay, so you trade as though it is the ABCD pattern here. The reason why I've attached the X to A is because there's another potential of a W-like pattern, and that W-like pattern will give me a bit of an idea if pound were to go up, how far more would it actually go up to. Okay, so what I usually do is I pull my X here to my A. Okay, and I choose the 78.6 percent and the 61.8. The 61.8 is already reached here anyway. I want to look at how far more could it actually go. Okay, so I've got the second line there, and another way of doing it as well is you pull your X to the C as well. Okay, once you pull your X to the C, you look for more 78.6. Okay, and you've got that one there. All right, so that comes up with a zone now. All right, so you've got a zone and you've got a W-like pattern. Okay, so I'll take that away. For those who have entered the the C to D on the buy side for GBP USD, that cross there, above that cross should have been your ideal entry. Okay, so 4263 is perfect because 63 is above the 50 side number, so you could easily choose 1.4260 if you want, and have that bought up and exit just before here. Now, if I take that away, the B to C cross there, oops, sorry, I'm not supposed to take the cross actually, I'm supposed to take the A to D, sorry. There we go. Okay, so it's a pretty W-like pattern, giving you an idea of where are the possible prices. Okay, and this is the possible TP point for your D and possible prices of how far it could actually reach. It might go beyond. And once it goes beyond, let me just mark this one here. I'll mark the GBP USD first. Okay. Now, this is your zone, okay? This is your PRZ potential or probable PRZ, probable reversal zones. Which is not 100%, but there's a probability of prices could play around here and come back, but it could also be another possibility if it does go above 1.4744, it might actually extend further. But let's play a little bit with the psychological numbers. If at all it were to go up, okay, it's better for us to look at prices go above 1.4760. 1.47, okay, 60. Why 60? 60 is the last two digits. 60 here is 10 pips above the 50 psychological level. So once it goes above and you see prices keep on extending 1.4760, then it may actually message or signal the markets to actually go possibly higher. Okay, so maybe past that and reach the 4780 area. Okay, this is just a possibility, but we are looking at two possibilities of prices reversing here and come down. Okay, and how far down if it does reverse and make that bearish tone, it'll be at least about 50% of the C to D move. Okay, so you can aim and take profit at the 50% level. Okay, all right, let me just check for more questions, guys. Okay, Osama, you're all right, brilliant. Okay, all right, so that's basically for the GBP US dollar. All right, now we'll go back to the daily chart, because daily chart, we have been following the daily chart anyway, and the pattern was drawn on a daily chart for a long-term scenario. And let's go back go to the daily chart. I'll clear this one first. Let me just erase all drawing. Now I've got my GBP here. Let's see. Okay, so this is the initial pattern. Okay, that was the initial pattern here on the daily chart. As you can see, we have got prices appreciating, okay, a lot. All right, has been a long journey up for the GBP, but we have got a risk area here, okay, and also the PRZ zone that I've drawn on a 4-hour chart earlier on for the GBP USD is your risk area too, okay, meaning that prices, yes, you're on a buy, but be aware and uh, keep yourself aware of that area there where prices could easily just bounce back or reverse or bounce upwards above that zone. Okay, so this is what's going on with a pound versus the dollar. We would need to also look at, give me a second guys. Okay, let's look at what I've been looking at here. Just roughly on the US, on the Yahoo Finance page under currencies, we've got a currencies center here, and if you look at the under the change column there, we have got appreciation and depreciation of certain pairs in percentage. Okay, we have got the most at the moment here. We've got the 4-8 region there for the GBP USD, so still on a very far upward move. Okay, now to summarize, we do have an upward move or bullish on 3 pairs, which is the yen, the GBP, and the CAD. Okay, and most of the rest depends on what it's combined with, is giving you a bit of a bearish sort of signal. But the ones that are still on the upside, as you can see, you've got the euro versus the yen. Of course, it has actually appreciated, but let's go on to the European crosses. Osama, I'll go to the table as well, correlation table, so it gives you an idea of how do you correlate pairs as well. Okay, and we have got, as you can see, we have got most on the upside for all euro and GBP combination, except for a few here. Okay, what this tells us is that you've got euro appreciating with most, but then we are still looking at more strength for AUD versus the NZD. So you can actually put the AUD NZD as well on your list under strengthening or strong pair. So you've got the yen, the pound, the CAD, the AUD, and the NZD on the upside. So what you do is that you mix and match which pair that could give you good probable patterns as well to trade. Okay, we will go into it. All right, so I'll just Osama, I'll just show you this one here on Forex. It's the same link that I've sent to you guys. If you go on to if you scroll downwards, okay, it's just a guide, okay, it's not something you can always type correlations, currencies correlations on Google, and you could look at what's the latest pages that has been updated for it. This one here, I would just frankly say it's not been updated so much, but it gives you a bit of a guidance on double checking, again confirming whether or not these pairs can correlate. But this is just to summarize. Now if I go on to the 120 days one, what you do is you focus on pairs on the left, all these pairs on the left. Okay, so for example, I would like to look at pairs that correlate highly, meaning the rate ones here. Okay, amongst the rate ones, you choose the highest number that you can see. Okay, so for example, Euro USD, amongst the rate ones, I have got 97% here. So 97% Euro USD correlates with USD CHF, but negatively correlates, meaning that they go opposite direction by 97% or more. If not exactly on 97%, it could actually be anywhere in the regions of 94% to about 96.5%. Okay, so you have got if there's a negative symbol there, it just means that that pair on the left, it negatively correlates. It goes opposite direction. And the second highest one, we have got not the negative ones but the positive ones. We have got Euro USD versus the GBP USD, and they positively correlate, as you can see. Okay, positively correlate, as you can see, 90% there, and it's a positive number. So that means if Euro USD is on the upside, GBP as well on the upside, and vice versa. Okay, so this is how you use that simple correlation table. But what I usually do is that I use it simply as a guide, meaning that if I have had, let's say, spotted a W-like pattern or an ABCD, a bullish ABCD, and a bearish W-like pattern on a GBP USD, I'll just look at which other pair that is highly correlates to the GBP USD, and in this case is -91% with the USD NOK, okay, the Norwegian krona. So what I do then is that I try to just confirm whether or not I see a another pattern in the USD NOK. So if I find a W bearish-like pattern in the GBP USD, most likely I'll get a clearer picture of it as a M-like bullish pattern on the USD NOK, because they negatively correlate. Okay, now out of all these pairs that you can see here on the left, I think the Euro JPY has got most highly correlated pairs marked in red. Okay, so the one that Euro JPY correlates very highly is this one here. It says here 99%, but probably it's about 95% or so, but it's still considered really high. So it correlates positively with CHF-JPY. Okay, so in other words, if you are already trading Euro JPY and you find that you would like to increase your portfolio in trading more pairs, diversify, not increasing, increasing and diversifying with more currency pairs, then you could actually literally look at the red ones here and analyze them too, and look at how many out of the red ones, highly correlated ones, that you could see a clear pattern and trade them. Okay, so this is what you could use the correlation table for. So in this case, if Euro GBP, we have got -88, GBP USD, we've got 89% there. We have got 91. Here's USD NOK. You've also got USD CHF negatively correlate with the USD CHF. So let's say if I see a W-like pattern here. Okay, on the daily chart. Okay, so I've got a W-like pattern. This one here is on a daily chart for GBP, okay, US dollar. So it says earlier on that we've got 80+%. It correlates with USD CHF negatively. So if I see a W here, most probably I'll look at a pattern like this. That would signal upwards. That's for the US. I would see this here for the USD CHF roughly, and I'll see this one here for the GBP USD. So let's take a look. Okay, let's go to the USD CHF right there. Okay, so here, for example, let me just delete everything. Okay, and it's negatively correlated by 80+% with the GBP USD. So I'm looking at a daily chart as well for USD CHF. Okay, now here is what it means. We have got various W-like pattern. We want to look at an ABCD that is clear as well. We have got that move here. That is another M. Okay, that's one M. We could even do it differently by looking at, give me a second, by seeing that as XA and then B and then C and then D around here. Okay, and ignoring that here. So definitely you've got lots of M-like pattern here that we can actually see. And at the moment, what I can see on the USD CHF is it may be more room to go downwards, because I have got a bit of an ABCD as a Z-like pattern here as well. So there is a possibility of a downwards move, but that may be limited to 50% here. Okay, if at all, it's a Z-like pattern for the USD CHF. Okay. Because loads of us are looking at the potential of trading the NFP, let's say. I'm not an NFP news type trader, but for those who are interested in trading that, some of you guys are looking at the Wednesday's figures for the ADP, the electronic, just to summarize it, the electronic version of the employment figures and things like that, just for you to get an idea of what happens on a Wednesday and then gauge what might actually happen on the Friday. Okay, so in that case, you want to look into the USD JPY, let's say, and see what's going on there at the moment. Okay, um, here we have got the USD JPY on a downward move, and the trend that is even the clock angle that is trending towards to, it's quite strong on the downside. Okay, we have got very nice separation between the EMA as well. Look at these EMAs are nicely separated. Their distances, they are probably quite equal distance between them two. Okay, and they spread across really nicely, and they're pointing downwards too. All right. Osama's question earlier on whether you could use the EMAs as a clock angle indicator. Yes, you can, and you can actually look at the how each one of them are pointing downwards with a different sort of clock angle. Okay, and you've got the 50, for example, the lighter blue one is pointing downwards at a more on a 5 o'clock sort of angle, and then the longer ones, the 100 and the 200 moving averages, they are sort of looking is showing you that they may be weakening in terms of clock angle direction to the upside or towards the 3 o'clock. So that itself gives you a bit of a hint that there may be a bit of weakening to the downside, but we're looking at a 1 hour chart. If we go on to the 4 hour, we are still looking at more strength. Okay, more strength to the downside. There may be a bit of a correction that's due here perhaps. This is what's going on at the moment. We've got 106.65, so it's gone above the 50 psych number, the last two digit after the decimal point. Okay, so we're aiming at the next one up is after 70 is 80, so there may be a bit of a weakening that may be probable. Okay, maybe around here. Okay, maybe around the 50 moving average, because it is actually moving upwards at the moment on the 1 hour chart. But if we look at the 50 here, we are looking at 107.37 area, and now it's 106. Okay, so it's giving you a bit of an idea that there are a bit of room on the upside, but there may be some resistance in this area as well. And I want you to look left whenever you are looking at area of resistance or support, and look at whether or not we have got anything going on the left side as well. Okay. All right, so that is what's going on for the USD JPY on the 1 hour chart. If we look into the 4 hour chart and zoom in, we could see more weakening potential. If at all you're looking at this as your A, B, C, D, and if you pull the Fibonacci from here right down here, you're looking at it very nicely. You've got double points that hit exactly on the 61.8, so that signals a very nice resistant area that might give you a bit of potential to the downside because it's on the 61.8%. so if at all it's going further down, it's got more room downwards, but 105.55 may be the area that you want to take profit, or above that area if at all still you're on a downside move. Okay, so if I take that right down here, equal that AB to CD, you can see that it's really close to the line that we have drawn earlier on there as well. Okay, there we go. So if it's 61.8%, you pull your B to your C, you look for 1.618, and you're looking at potential area here. All right, there we go. So you've got the area right there. Okay, that's the area that it could still go down to. Got some question here. Osama, you've got a question here. You're saying, suppose if the price crosses the 50 EMA, so then we can expect it will touch the 100 EMA. Potentially, yes. It doesn't always happen like that. It does depend on the strength of the trend of that pair. Excuse me, guys. I've got a bit of a sore throat. So that's the thing. You would need to look at the strength of the pair and look at how fast that candle on the shorter term as well is actually passing through that 50, and you want to compare it with the three time frame. So let's say, for example, you're looking at all three time frames showing you a very strong angle, strong trend on the downside. Then you're looking at a bigger possibility for it to actually fall. Okay. Especially if there are confluences. Yes, you are absolutely right. And the confluences that you see in all three time frames when they match with the EMA, the clock angle, and the trend and everything else, and then it confluences further with how much it crosses beyond, under, or above the side numbers. That is basically quite a clear sort of indicator for you to look at how far more it could go. And then you look at the pattern side of things. Okay? All right, good. Okay, so that's your USDJPY at the moment. Quite a number of traders who are interested in gold. Okay, this has been actually talked about a lot since a couple of weeks ago, even months ago, even the time that I was in Malaysia as well. If you guys could remember, we've been talking about gold's possibility to go upwards, as well as silver. So we have seen loads of depreciation. We have seen nice patterns developed. A lot of people have actually profited and gained loads of pips through gold as well as silver. Silver, would like to just repeat that again. Silver has been said to overtake gold in terms of how much it appreciates. It could appreciate even more than gold. Gold is seen to have appreciated, gone up quite a lot, but there's still some room to go up. But silver has got much room, and we can actually look at some more patterns and things like that. We are looking at gold at the moment, and let's see what we could gather. Okay, I'll just remove all these indicators first. Give me a second. All the objects here. Okay, we have got that's happening for gold on a 1 hour chart. Let's look at the daily chart at the moment. We do have a sort of J-like pattern here. Okay, this pattern here, if I equate that to a sort of a Z pattern, it's also possible. Meaning, if I take that move here and I put it all the way down, and I would like to look at where the 1618 area. Okay, usually what happens is, this is what usually happens if we have got a pattern like that. Okay, appreciate somewhere at the nice Fibonacci ratio and come back down again. All right, and that distance is usually there, that distance there. Okay, and here, as you can see, it did come back down a little bit, but then it didn't actually go quite to this area here, and this area is usually the 50%. Okay, now if it did actually go on like this and come down here, then we could say that this Z pattern has completed. So this Z pattern has failed actually, because it didn't actually come down here. So that gives me another signal. It gives me a signal that the gold prices are only going to strengthen further, because it didn't actually come down under this point or correct and come down to this area, and it's actually just went middle way here, and now it's shooting off. Okay, and shooting off at a very interesting price at 1296.24. So it has actually been giving lots of signals from before, with lots of other patterns showing a possibility of a rise towards the 1000 1300 area, and lots of experts and lots of possibilities as well are pointing out to the possibility of prices reaching the 1350 area, and once it has reached the 1350 area, it may actually aim at the 1380 area, and once it does pass 1380, there are more possibility to go at 1400 to 1450 area. So still lots of room. Let's look at it from a clock angle perspective as well. Okay, right. As you can see, we zoom out a little bit. You could see the clock angle here is very steep. Okay, very steep. All right, and that is close to a 12 o'clock sort of pattern. Okay, and that is on a daily chart for gold. Okay, and once I look at other possibilities, let's look at other possibilities. We did have loads of lower lows, and then suddenly made that J-like pattern upwards. Okay, as you can see, we have got nice separation between the three lines. We got concentration of price here. Okay, but once it's around here, you want to look left, and you can actually see some possibilities of a sort of correction or resistance at that area there, or even that area there. Okay, so what you want to do is try to draw a proper zone based on a concentrated area. So if I were to look at this area here, okay, you could actually choose whether it's here or probably here. I want to choose slightly higher as well, or even lower. If at all I'm taking that lower bit here, I'm drawing a support resistant line, okay, based on that candle here. So I look at loads of concentration within that zone here, and there are indeed some long candles going through it as well. So that is giving me a sort of probable support resistant area, okay, there. But of course, if you zoom out, okay, and start picking any of these peaks downwards. Let's say we've got a significant peak right up there, and you go downwards, you could see that 78.6 Fibonacci ratio, pulling it from there right down here, is actually landing very close. Have landed very closely to the the uh, the horizontal lines that I have drawn. So there are a bit of coincidences or confluences occurring as well. So when that confluences occurs, what that shows us is that this area that we have just drawn now may be a powerful support resistant or resistant area, or even support. Okay, but you want to look at that area there to hold or exit before that and re-enter your trade, just so that you don't get kicked out in the market or face some sort of risk in that area, because that zone, support resistant zone, could also play out to be your risk zone for you to watch out and look at these levels. Okay, and also saying that you've got 1296 area, which is really close to the 1300 area, and 1300 is a super sort of support resistant area, and together with that is 1320. So 1320 is said to be an important level, or a significant support resistant level for the gold as well. So yes, it is actually appreciating loads of support, as you can see, and the support has had happened on this 50 EMA itself, and starting to go up. Okay, there we go. So let's look at what's going on. All right, now let's look at what's going on right now for gold on the 5-minute chart, and I'll just zoom in a little bit more. All right, as you can see, there's some struggle in between the three lines for gold at the moment. Okay, so you want the prices to go above all three lines to signal more push to the upside. As you can see, there's some uncertainty already happening at this price now at 1296.65. Okay, and if we go and visit the 1-hour chart, we could see all kind of things going on at the moment. There are possibilities of a correction, and if at all a correction does occur, that means it'll make a pattern downwards, right? Okay, and this here is another pattern here. If we attach right there, that becomes a Z-like pattern, but we need to wait until prices does correct itself. If it does, this is called a bullish like pattern. If it does actually come downwards to the 50%, at least here, this means it might make a correction upwards. Okay, so that is a possibility of a Z-like pattern, but we need to look at it from a Fibonacci perspective as well. So if at all you want to look at how far could it actually go, you put a Fibonacci from this tail here right downwards and look at the possibility there. Now it has actually gone in reverse from there. You did have some resistance there as well, but then it crossed upwards and on the way down. So if at all it's making some form of correction to scare traders and you know uh, do a correction on to the downwards to the downside, then you want to pull that all the way up here, and if at all it does depreciate further, that is a potential level 50%, okay, of how much it would probably go. Now if I double click that off, I measure, that is my AB. This is a Z-like pattern, okay, so if I take that and I do that, that's quite close, and that is a good sign. Sometimes right on the dot, so the more on the dot it is, the better. So that is, there we go. And if I attach that all the way upwards, okay, this is how far down would it go. But again, look at the concentration area. This may be support here as well. So we have got some level of support there, okay, and you want to zone it out like that. So this is another area that you could easily not come down to this area and make a further push up. If it does make a further push up, then this Z pattern may have failed, which also means that there are more potential to the upside. Okay, because that means the buyers or the bulls have dominated the market much more earlier than expected. Okay, but we want to look at prices coming under the 1290. If it does, it may aim down here before it correct itself, going upwards. All right. This may also be a just want to let you guys know, if at all this Z pattern does actually come true, and it does come through under this zone and come down, this may actually show that there are potential of an upside for the dollar. Okay, so dollar, as you guys know, have actually depreciated a lot, and they are I mean, if you look back into history, I mean, from many months ago, probably about a year ago, last year in 2015, the US have actually mentioned about increasing or rising its rates at least 4 times in 2016. Okay, it has already risen its rates, I think, 3 times. So we've got one more space, one more shot to go. So this may be it, that you know, they want to gain back all the strength for the dollar that they have actually lost. It may be just a correction in the market for the dollar, but they may use the possibility, they may use the data from positive side, on the positive side, for the employment and other figures to actually push up the price. So if that does happen, this one coming downwards for gold, then the possibility of the USD versus JPY to go upwards as well are pretty high. Okay, right, I've got some questions. Sorry to ignore you guys there. Okay, let me start with Mr. Palani. You have got a question on GU. You would like to check on whether you've got possibility of reaching 4800. Yes, there are possibilities of reaching 4800. We'll go back to JPUSD in a while. There are areas that you would need to see. If it passes through these prices, then the possibility of it reaching the 4800 is very possible. Okay, I'll just keep that in mind. Give me a second. That's GU. We'll visit GU. I've got a question from Mr. Chin as well. How do you read the GU short term and long term? Okay, we will go. So we'll just visit GU at the moment, and we'll go through that right away. Okay, so let's go on to the GBP. US dollar. I'll use a clean chart. Before that, I'll answer Palani's questions first. You've got 1.4675 now. Okay, here this price here now, it's, let me just clearly indicate that 1.4675 roughly. Okay, now that is really very close to the 1.4680 psychological level. Okay, so you can see that the price now, as it goes upwards, it's going towards 1.4680 due to the last two digits at the back. Okay, so if you want to look at whether there are more possibility to reach higher, then you would need to wait until prices go past the 1.4680 by 10 pips at least. Okay, better if you look at it going past 80, past 90, and past the 00. Okay, meaning once it has gone past one, let me just do this, 1.4710, okay, then it has more possibilities to go towards the 14750 area, because in history, if you look back, 4710, 4720 area is highly significant support resistant area as well for the GBP US dollar. Okay, but saying that, it looks like there are more room and more possibility to reach the 4700 area or 4720 area, only because we're looking at the play of the market, meaning that what's happening on what's going to happen. What's happening in the news side or the data release tomorrow, Wednesday. Wednesday we have got the US dollar, but again there is a big limbo at the moment. It does depend a lot. This week depends a lot on what the US plans are. The US may be coming back with a big surprise, and trying to gain back all the depreciated value of the dollar. We don't know that, but it's got two themes. It's got two very big events that it can play on, which is the ADB on the ADB on Wednesday, which is the electronic version of the employment figures. Then we have got Friday, the actual NFP non-farm payroll as well. So they've got these two things to play about, and there's a lot of gossip in the market saying that they may actually just rise, hike, and suddenly all the positive numbers from all the data releases might come through. So we don't know, because they have been doing that a lot, every time covering up what other people have been revealing it to be not real, and then suddenly we have got all other figures, very positive one might come up. So looking at the timing as well is quite tricky for it, but there are more likelihood for an uprise for the dollar. Okay, so if that does happen, if the dollar does actually happen, the strength of it keeps on going up. There's more positivity, more hint of positivity starting today evening, tomorrow onwards. Then you might see that this W pattern might play out very nicely for it to come downwards. Now look at the price here, 1.4676. It is still, if at all you have bought from C to D, you're looking at buying it, okay, buying it anyway at the cross area here, okay, but then you should be already exiting at 1.4670 early before it reaching the 80, correct? So this zone here now, the price is playing at a very dangerous zone, because it's a highly significant support resistant area, as you can see. Okay, here, and you're looking at price action wise, 1.467475, too close to the 80. So it's best for a wait time, as opposed to leaving your trades open. It may be a riskier move. Of course, if it goes your way, it's fine, but then we are at a very risky in all aspects, on fundamentals as well as the price action as well for the GBP US dollar. Okay. So I hope that's clear, Mr. Palani. If there's any other questions, feel free to ask. To answer your question briefly, yes, there are possibilities, but it does depend. Tonight onwards, let's see what revolves around with the States, what kind of things are coming out from the States, because now the news will start sipping in, whether it's more on a positive note or more on a negative note. In my view, my opinion, it may be more of a positive note. There's a bit of a cover-up story that it would like to cover up and make that US dollar regain a little bit at least, because it's been far too low for far too long for the States, meaning that even a couple of days or a week or 2 weeks have been too long for them, because it's a lot of depreciation. Okay, 3 days to 6 days, it's a lot of depreciation for the dollar. Okay, so we have to look at what US's plans are, because that plan is what's going to move gold as well, and the other pairs, especially the yen too, actually. Okay, it's very correlated. Politically, behind the curtains, very correlated between the yen and the dollar. There's a lot of plans politically and geopolitically behind that. Okay, all right. So that's basically it for GBP US dollar. But I want to speak about trend for Mr. Chin. Now let us go on to. Give me a second. I want to pick a fresh pair. Sorry, a fresh chart. Okay, I just have the 50, 100 and EMA on my chart, Mr. Chin, and I'm looking at the GBP USD H1. Okay, now I would like to first zoom out. Your first step is always to zoom out. Why? Because we can then look at the trend as a whole, the clock angle and all that as a whole. So we start off with 1 hour chart, and then we go on to the 4 hour, and then we go on to the daily chart. Okay, so here itself we can actually look at it all the way up as far as your eyes could actually see in terms of the trend. Okay, here we've got a very nice low here, and then we're looking at all the way upwards until the price now. That angle itself is a 2 o'clock sort of angle for GBP USD 1 hour chart. Okay, it's not a a very strong trend. Usually that angle here will be steeper like that. That's 12 o'clock. That is about 1 o'clock, 2 o'clock, 3 o'clock's right downwards. I mean, not downwards, but horizontally. Okay, so give you a bit of an example. This one here is a 1 o'clock trend. Okay, there. All right, there you go. Sort of 1 o'clock trend. Okay, so if I pull that for a overall picture, still on the upward move, but not very convincing that it will just shoot up too much. It may shoot up a little bit, but not too much, because that's 2 o'clock angle. But if I use this angle here, okay, right, that's slightly sharper now. So there are moves. They're still on the upside. We can see that another thing to look at as well is all these candles. They are all above all three lines. They're actually, you could see it from a price action perspective via the candle itself. You could see many support onto the 50 EMA, and it's trying to shoot upwards. And look at the prices now. Prices is at at a dangerous, not very clear-cut area, because it's too close to the 80 psych number. So yes, there are some depreciation, as you can see, of prices because it's too close to the 80. Okay, so if we go on to the 4-hour chart, you could see that it's medium term, still more room. Medium term, there may be more room, but again, we want to wait for prices to go above the 80 or the 90, or even go past the 47 and look for much more room to the upside, up to the 48. But let's wait and look at what's going on with the States from tonight onwards until tomorrow. Then look at how prices are playing. If the prices are playing with the news on the States, that is actually going to boost it up much more, and you can see that prices has passed the 4680 and aiming at the 4700 area, then you know that the news that is created there is more on a positive note starting from tonight to tomorrow morning. Then you know that that is the flow that the States wants to reach, and once the prices is moving very nicely above the psychological level and coinciding with positive news that's going on, then you know that they're more likely for prices to reach a 4800. But a 4800 may be the place where it just start to stop and start going down. Okay, all right. Let's see. Let's look for questions. No problems, Balani. Okay, so Mr. Chin, I hope that is clear so far. We're looking at the whole 4-hour chart, and then on the daily chart, we can see that yes, there are appreciation on the upside, but again, you want to always think about the risk. Where is the risk on the daily long-term chart? There are risk in this area. Why? Because we have this area here that is very close to this 200 exponential moving average. Okay, so you want to know that yes, there are potential upside. Even on the daily chart, we have got the ABCD as we've drawn earlier on. Okay, you can make that a W as well as we have mentioned earlier on. But again, that area there, we never know how that's going to move exactly on the 200 EMA either. But there is a likely downward move at this zone. Okay, so be very careful. In that zone coincides with the 4700, with the 4680 now, of course, but if it goes past through, then it's too close to the 4800 area as well. Sorry, the 47 areas, 4720, 4750. So you would need to look at the prices coinciding with what's going on in the news. Okay, very, very important. Looking at the psychological level, knowing your risk area. Yes, prices are going up, but going up to how high, in which psychological level would actually approach and may have a possible turnaround or reversal. So you would need to be very, very careful. And then you would want to monitor on the news side of it. Try to feel the tonality for the news. Are the news actually starting to create and make up positiveness? If it may not be real, it may be real, it may not be real, but then we don't actually care about that. We want to look at the sentiment because it's mass psychology, because there is mass psychology that is ruling the financial markets, not the actual numbers. Okay, so this is what's going on. So we have that in play. Okay, apart from the GBP USD, guys, any other pairs that you would like to look at the moment? Anything, any pairs at all from you guys? Okay, perhaps if there are some pairs, just shout it out and we can take a look at it. Not a problem. So GBP, I think it's clear. Mr. Chin, is it clear for you on the trend part? If not, I can easily repeat them, not a problem. Okay. I'm sorry if my voice is not really clear or loud because I'm struggling with a sore throat developing at the moment. That's why. Okay, let me see. I just want to draw something here. Let's see whether that plays out. That didn't play out very well. GBP USD. See, I'm looking at even a possibility of a very big ABCD sort of pattern for the GBP US dollar, but it may not actually happen as yet because you've got all this correction here. Okay, but again, it's not something very solid because we're looking at more rise and potential on the upside for the pound. So it's no point looking at the a bearish ABCD at the moment. We want to look at positive pattern as the trend plays. Okay. Thank you, Mr. Chin. Thank you. Okay. All right. Let's see. Okay, guys. So we've not touched too many pairs, but there are some pairs that we've actually seen through. As I've mentioned earlier on, we have got more strength for the yen, the pound, the CAD, the AUD, and the NZD. Let's look at one of the pairs revolving each, the NZD and the AUD USD. Let's go on to the AUD USD first. All right. Okay, I'll apply the lines from start, the moving averages. For those who are new, moving averages, make sure you've got the MA method exponential applied to close. We start with, let's say, the 200. We work our way down to 100. Okay, you can use any colors you want, guys. Okay, it's entirely up to you. As long as you can differentiate between 100 to 150 EMAs. Okay, that's it. And the last line here, 50. Okay. All right. There we go. So we have got three moving averages up. we zoom out and we look at some complications on the AUD USD. We are looking at complications. Why? Because we have got a bit of a mismatch in the news out there, maybe looking at more appreciation. But down here on the chart, we're looking at resistant, trying to penetrate through, but have not managed to penetrate through the 100 moving average here. Okay, if I zoom in a little bit, as you can see on the candlestick chart now, you can see loads of resistance coming downwards. Now let's look at the price wise. 0.7611. Okay, so 11, it's about 9 pips or so under the 20 side number, so it's signaling downwards move. We've got longish bearish strong candles here as well. Okay, so this is only 1 hour chart. Let's look at the 5-minute chart to look at what's going on now. So now, from now until the 1 hour chart, we are looking at, from 5 minutes to the 1 hour chart, sorry, we're looking at more room to the downside. Okay, more room to the downside, more strength to the downside, maybe something pulling it downwards. Let's move now onto the 4 hour chart. On the 4 hour chart, we're looking at more, we've got some support here, okay, but we did actually, it resisted there very closely. And as you can see on the 4 hour chart, the 3 EMA or exponential moving average lines are not that clear. Okay, they are all on a sideway at the moment, and that is signaling some uncertainty in the market. Even the 3 lines are actually on a 3 o'clock sort of trend. So there's something from now until later in the medium term, some things may actually be pushing AUD towards a breakout, whether it's a breakout upwards or a breakout downwards. We don't actually know that yet, but we do have a higher low here as well, which also gives us a bit of indication to upside sort of move, only because we have got there, okay, that's a trend line there, okay, that kind of pattern, but we have a sort of parallel up here, so it might have to break out that price there at 7658. Very nice. 7658 is actually very close to the 50 second number. 7660 is a nice upward move entry usually. So let's wait and let's look at what's going on with the Australian dollar, because it's not good in terms of prices at the moment. Okay, still we've got to wait a bit more, not much, but we want to look at, only because it's, you know, doing all this thing at the moment. It's not really sure. It may be a correction at the moment, but on the downside, and then look at more possibilities to the upside. Okay, here, for example, if at all it does actually come downwards, then we're looking at a potential Z-like pattern here. Okay, that length may be similar to that length. So if it does come down here again, like go up again. All right, so that is a possibility for the long term on the downside, but as far as we could see at the moment, it's not that clear for the AUD, so we want to stay out if we are actually in doubt, so that you increase your probability and lower your risk. Okay, and so let's look at oops, give me a second, look for more questions. Okay, AUD USD, yes, we're looking at AUD USD at the moment, Osama. All right, there you go. So here, for the AUD USD on a daily chart, I just want to test whether there's a possibility of a Z-like pattern. Possibly. Okay. As you can see, that's actually on the dot at 200. Okay. If I take that and put it here to make it similar in length, and I mark this here, let's test and see whether or not that line is about 50% of this whole pattern here. Okay. Oh, very nice. So that gives me a signal for AUD US dollar for the daily chart. Okay, to have a pattern that looks like this. Okay, that looks like a Z-like pattern. So if I put that down here, I take that up there. Okay, I measure, that's a bullish Z-like pattern, which actually means that once prices do depreciate more or fall much more on the downside like this, okay, then there's a potential of it to go up here, and that upwards move is usually about 50% of this move here. That's my A here, okay, this is called a bullish ABCD like pattern, okay, B, C, D. So on a daily chart, a potential downward like move, okay, so let's look at what's going on now. What are the possible patterns that we can play at all, if at all there are some bearish like pattern that may push prices downwards, and you can see that that's a Z-like pattern that we've drawn on a daily chart, brought to the 4-hour chart. That's how it actually looked like. If we zoom in, we could see more dominant on the bears. So that might actually may be not coincidence, but a confluence. Okay, so if I take that small move, you could see that there may be ABCD downwards. Okay, but this could also be a potential W-like pattern. But again, we don't want to play with prices that are in between the three lines. It's just not really convincing enough, okay, because anything could happen at this point based on this 4-hour chart, where you can actually have an ABCD like this, let's say, okay, you can have an ABCD this way, okay, and that becomes a W-like pattern here. Go up to this point and then fall. Yes, it can happen, but it could also happen on the other side, where you have a AB here, okay, see at 78.6, okay, you can have an AB this way here and then come down this way, okay. See, you've got a possibility. You've got an upside ABCD or a downside ABCD, but at this stage, it's probably not a good time for us to decide, because the market needs to decide first on which direction. 7615, if at all, is coming downwards. It is coming down under the 20. So this area here is best for us to stay out while prices is in this area, because it's choppy, meaning that it's actually volatile sideways and it's a 3 o'clock sort of angle, and it's uncertainty. Okay, when in doubt, stay out of the market. So that's probably the best thing to do. So not yet for AUD/USD potential, but as we have seen on the daily chart, yes, there are potential downward move until this end and then an upward rise, but let's look at 4-hour until prices go downwards. But for the 1-hour chart, the same thing. It's already started to give you lots of headway on the downside. So this is probably what we need to do, is to look at price. So 0.7614, probably a 76110, which is 10 pips under the 20, to actually do a sell-like entry on the 1-hour chart. But that could actually be an ABCD as such. Okay, there we go. And an aim at this area here, which is 7573, but not a very nice area to take profit, because you need to take profit at your above 80. So 7590, 10 pips above the 80 is 7590. Okay, so 7610 and 7590. Short, too short, but that's basically what's available at the moment. So we need to make sure of the trend first before we plan for any patterns. Okay, so on a 5-minute chart, yes, more on the downside. So for the AUD/USD, there are more potential to the downside, but we're waiting for the price, because as we see on the chart, we need to marry that up with what we hear in the news and some fundamentals, or even geopolitics, to actually match with what we see on the daily chart, which is more room to the downside as opposed to the upside. Okay, at this stage, from a patterns perspective, of course, you may argue that prices are above all three lines, but again, notice how uncertain the market is at the moment here. Why? All the three lines are entangled. When they are entangled, a lot of things can go wrong. A lot of things may go against you. Actually, it is the uncertainty of the market giving you hints. See, the market may play you out saying that, okay, there's a higher low here, higher low, higher low, higher low. So market is on the upside. Hence the reason I don't believe 100% on that style of trading, because with the pattern I could actually see the possibility on the other side. Okay, there may be, yes, on the upside, but perhaps a correction first before it goes upwards. Okay, all right, that's for the AUD USD, excuse me. Okay, and now if I clear all that again on the drawings, if we go on to NZD USD, we're looking at, usually there are correlations between the NZD/USD and the AUD/US dollar. Okay, so yes, this one here looks like it's quite clear. It may be a bit of a correction downwards side of it. So there may be pattern. As you can see, the patterns are almost the same. Z-like pattern on the daily chart. Okay, as you can see there. So it's more or less the same of what may happen in NZD/USD compared to the AUD/USD. Okay, guys. All right, I think that's basically it. Perhaps we want to wrap up. Just before wrapping up here, I would like to ask you guys of any questions that you may have, anything that you would like to ask before we wrap this one up. Okay. Just to also let you know, while waiting for questions from your end, is that we are having the Wednesdays live training for live account holders, and that starts on the 18th, if I'm not mistaken, on the 18th of this month in May. So on the 18th will be the first Wednesdays live. It will be something like this, but probably a bit more in detail to your current trade. So it's open to those who have a live account already, a bit of troubleshooting as well involved, looking at advising you on your current trades and your current goals and things like that. So it's a bit of a coaching-like session that happens on a Wednesday, but that is meant for live account holders only, or for bets. Okay. All right, guys. So I would like to maybe no questions at your end, so I can actually then just wrap it up here on our session today. So we can then see you again next Monday or even Wednesday for those who are interested in attending the Wednesday session for live account holders. Okay. Also to remind you guys, I have the geopolitical series starting tomorrow as well at 4 GMT. So that would like to welcome you guys on that as well, and you can find the link available at Orbex blog, and kindly register for that, and I'll be happy to welcome you to the series, okay, the geopolitical series. All right, guys, so that's all I think I have for you guys, and I would like to say a big thank you for attending this webinar today, and wishing you a very good evening to all of you, and may you guys have a happy pipping session throughout the trading week. Okay, so take care, and thank you very much. Bye bye now.